Zoom stock just announced their Q4 earnings, and after the earnings, the stock has gone up huge 5.8%. Before the earnings, it was down 0.28%. Is now the time to finally buy this company? During the pandemic, it had reached up to $550, which is basically 90% off the highs. So, is the stock finally bottomed? It does have a PE of 18.7, which is very low now. And it does seem like basically most of the downside risk has been taken out of this name. So let's have a look at this earnings and see if this company is worth a buy. Getting into the earnings per share estimates for Zoom, we can see it's expected to decrease substantially in the upcoming quarters, but then in 2024 it reaccelerates. And mainly this decrease is because they are creating new products, which I'll get into when we go over the news. We can see from a revenue estimate, this company is still growing, but in the low single digits. For me, it is a little bit surprising to see this growth because the pandemic is basically over. But a lot of this growth is coming from the enterprise where they are adding new customers. And this is something we will see when we get into the earnings report. Now, getting into some recent news about Zoom, we can see that like a lot of tech companies, Zoom is going to be doing layoffs. So they're cutting 1,300 workers, which is around 15% of their workforce. And we likely won't see this in this earnings report, the effects of this, because it was only announced in February 7th. But we should see it in the upcoming quarters where the costs start reducing. What I really like about this is that the CEO, Eric Yuan, is actually planning to reduce his own salary for the coming year by 98%. And he's also foregoing his corporate bonus. So this is very nice to see and shows that Zoom is a well run company because the CEO of a lot of companies just like to cut workers, but they don't cut their own salaries. But this is nice to see that he's cutting his salary in a huge way. In the recent investors call that Zoom had, they mentioned that they are going to be creating a lot of new products. A lot of people still incorporate Zoom with their meetings software, but they are going to be adding mail, calendar, and then chat as well. And this should increase their platform usability and introduce a lot more corporate business, which is where they're seeing most of their growth. We can see this in another slide that's mentioned where they have their Zoom One platform, which they're trying to build out. And basically, they're trying to copy Microsoft and their own product suite. They even have a marketplace as well where they'll be getting a certain cut on those sales. And then they want to have call center changes where they are introducing virtual agents in the call center. So this is all very nice to see that Zoom is trying to go from just a single company that does meetings to having a huge list of products. We can see that Kathy Wood, who was very popular during the pandemic, but now I think is basically a meme, thinks that Zoom is going to reach a $1,500 price target by 2026. We'll see if they can do that, but this is an interesting take on Zoom and the potential for it to increase in the future. Getting into the earnings report, we can see that the fourth quarter revenue was up 4% year over year and 6% in the constant currency. And for the full year, they were up 7% year over year and 9% with the constant currency. And the enterprise revenue, where they get most of their growth, was up 18% year over year. And for the full year, it was up 24% year over year. This is good to see that these numbers are increasing because they need more enterprises to join their platform. And hopefully, with the new products that they're releasing, this should have a higher increase over time. We can also see that the number of customers contributing more than 100,000 in the past 12 months was up 27% year over year. So the people who are on the platform are contributing more money. Looking at the customer metrics, which is an important part of the earnings report, we can see that the number of enterprise customers has increased 12% year over year, but the amount that they're spending has increased basically 15%. So this is good to see that the people who are on the platform are spending more money as well over time. And we can see that there are an increase of 27% in the amount of customers that are contributing more than $100,000 in revenue. And the churn rate for Zoom is only 3.4%, which is decreasing by 40 basis points. So it was 3.8 the previous quarter in the last year. And this is good to see because it shows that Zoom is a sticky product. And especially in the enterprise, it's very rare for companies to switch between different video conferencing very quickly. And then there was a new metric that was added where it's showing the online monthly recurring revenue from the customers who have a continual term of service of at least 16 months. This was 72%, and it was up basically 13% from the previous year. This is good to see that the people who are part of Zoom are staying there for a long time. And I think this number has increased from the previous year, mainly because Zoom has been around longer now. So, this is something to keep in mind as we get into further earnings reports for Zoom. Getting into the outlook for Zoom, we can see that they have provided both the first quarter as well as the full year guidance. But I will look into the Wall Street numbers because it does help paint the picture of whether Zoom is beating those expectations or not. When we get into the Wall Street expectations, we can see that they are expected in the first quarter to have a revenue between 1.08 billion and 1.085, but the consensus was 1.11. But in a constant currency, it is expected to reach near that level at 1.102. So it's pretty close to the consensus. And from a non GAAP earnings per share perspective, we can see that it's expected to be between 96 cents and 98 cents, while the consensus was only 86 cents. And mainly, this is probably because of the cost cutting that Zoom is doing. And for the full year, the revenue is expected to be between 4.435 billion and 4.455 billion, which is below the consensus. So I will say the earnings are a little bit mixed. Obviously, the stock was down around 90% from the highs in the pandemic. So a lot of this is probably already priced in, but this is something to keep in mind. Getting into the balance sheet for Zoom, we can see that it's probably one of the best balance sheets you'll ever see for a tech company. They have very good assets, around 8.1 billion, and almost no liabilities at 1.9. So there's basically nothing to worry about here. Getting into the income statement, we can see that the revenue was up year over year, but they actually weren't even profitable this quarter from a GAAP perspective. And mainly this is because all the operating expenses has increased, and management did give a reason for this. And mainly that's because the stock based compensation has increased on this company. And that's something to expect because the price of the stock has gone down a lot. So they had to issue more shares, which is why they were not profitable this quarter. They were profitable the previous year, but this is something to keep in mind. Also, they are doing cost cutting. So hopefully in the next quarter, they will be profitable from a GAAP perspective. Getting into the technicals for Zoom, we can see after the huge drop, it's basically been in an area of consolidation for the past couple months. So from August of last year to now, where it's been trading between $87 and $65. So in the after hours, it's still basically within that range. I wouldn't really be chasing this rally in the after hours. I think over time, it should probably reach around the same level around 73, where if you were bullish on the company, to buy at that level at 73. But to be bullish in this company, I do think that you have to really believe that it can take market share from the big dogs like Microsoft and Google, which create similar products, and that they can create enterprise software better than them, because that's what this company is going to take in order to have growth. Personally, I don't believe that Zoom can do that because those companies have so much more resources on their side compared to Zoom. It's basically David versus Goliath. So I wouldn't really be a buyer of this company, but if you think that it can go up against those companies, there's obviously a lot of growth that this company can have in the future. So that's basically my analysis on Zoom stock. If you reach this point in the video, please consider subscribing to the channel and liking the video, as that really gives me a lot of motivation to create more videos like this. Thank you.